What's up, everyone? It's Caddy with Money Vesting. So the market's here very back and forth here on the day, with the NASDAQ down over 0.5%. The S&P 500 was also down 28 basis points, and the Dow Jones doing a lot better, up over 39 basis points on the day. So hope you're doing great. And this week is over with a very, very flat markets. And next week we do have Monday as a holiday, so it is a longer weekend in observance of President's Day. So this is going to be a shorter trading week. So just want to remind you of that. And of course, 10-year yields have been pushing higher. The volatility has been a little bit back and forth as well. And not to mention the dollar index, which has also been on this move of a counter trend rally. So as always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. And I have plans of posting a lot of private videos for members only this long weekend. We'll be going over some potential swing trading ideas that I have in mind, and along with some other tutorials on options and other fundamental and technical analysis as well. So if you want to get access to all those tutorials and private videos for members only, links are going to be down below if you want to join our Patreon and access all the different channels in our Discord as well, including alerts, day trading alerts, investing alerts, swing trading ideas, and of course, not to mention options trading as well. So links are going to be down in the description below. So this right here was, again, the state of the market. NASDAQ here, selling off intraday, and then intraday we're seeing a lot of buyers step in, push up about 1% here. Same thing with the S&P 500, lots of buyers stepping in, and the Dow Jones was pretty much gapping down, and then from the get-go, it was higher, up about 1%. So lots of buyers kind of gravitating a little bit more towards value, away from tech and growth. Not a surprise, considering that, we have seen the PPI numbers come in very hot this week. The CPI numbers also came in super hot, but the sentiment is still very, very strong. It's still kind of holding up a lot better than what I expected. Dow closes more than 100 points higher on Friday, but not just third straight week of losses on rate fears. So Dow Jones rose 129 points. The S&P 500 shed 0.28%, and the NASDAQ fell 0.58%. On the day here, energy was the biggest laggard. Devon Energy dropped 4.29%, dragging down the S&P 500. And of course, I think ExxonMobil and Chevron also had pretty brutal days today. Art Hogan, chief market strategist at B. Riley, says, and I quote, "We've been in a very continuous tug of war between the equity markets and the treasury market. And while treasuries are signaling that the Fed is going to hold rates higher for longer, equities are not listening and instead looking for a soft landing." So that is very true. I think the equity markets are in their own world right now. They're very much not in sync with what the Fed funds futures are telling us, not in sync with what the Federal Reserve is telling us, and not in sync with what the bond market is telling us either. So there is a little bit of a discrepancy from the equity markets, and equity investors seem to be looking through a couple more rate hikes and looking forward to a pause in the future, and potentially even cuts in December of 2023. So this right here was a state of the market. Again, Tesla here holding up really well, up 3% on the day. Amazon slightly down, Google slightly down, Meta holding up pretty well. We got Microsoft down, Apple down, NVDA here selling off over 2.7%. AMD is down almost 2%. PayPal pulling back a little bit. MasterCard and Visa also selling off. So the stocks that were doing a lot better today were consumer defenses, utilities, industrials, and healthcare. Energy absolutely getting slaughtered here, down almost 4%, 2.2% for Exxon and Chevron respectively. And of course, Occidental also selling off here intraday. So lots of selling pressure for energy, for technology, but healthcare, defensive, and utilities, a little bit more risk-off type environment here on the day today. So utilities doing really well. And over the last 1 week, we've got consumer cyclicals and defenses, industrial, and utilities doing the best, with energy being the biggest laggard. And over the last 1 month, technology, consumer cyclicals, industrials, comm services, and financials doing a lot better, with energy being the biggest lagging sector in the S&P 500. Coffee prices, volatility, cocoa, canola, corn, all pushing higher, with natural gas, heating oil, crude oil, palladium, lumber prices, soybean, and the NASDAQ, all of them is selling off, with Bitcoin once again pushing higher past 24,000, Ethereum also past 1,700. It was quite an interesting day because on one hand, you did have a little bit of a risk-on rally for Bitcoin and Ethereum. So Bitcoin was up on the day a little bit over 4.5%, pushing past 24,000, and Ethereum also past 1,700, and it was up over 3.4%. So that was risk-on. But in the equity markets, it was very different because utilities, healthcare, materials, industrials, those were the sectors that were pushing higher, and tech and growth was selling off. So it was a risk off in equities, risk on in crypto. It was very, very different there. You don't always see that discrepancy, but today there seemed to be a lot of risk on in cryptos, a lot of risk off in equities. Now, going over to the 10-year yields, again, we've talked about them, but they are on the move. The 10-year yields right now are sitting at 3.822%. So they have pulled back about 1.11%, which again is a little bit of a positive for the market, but definitely on the move and have been on the move. And if the 10-year yields continue to push higher, that's going to put additional pressure on the equity markets without a doubt. Talking about the dollar index here, once again, it was up to as much as 104.667. So we are seeing a little bit of a pullback here intraday. So I think that's really what relieved the markets a little bit as the dollar index pushed up and then started rolling over. Same thing with the US 10-year yields. They pushed up and then they started rolling over. It really helped the markets kind of recover a little bit intraday here. So dollar index, keep a close eye. Again, we're seeing a bit of a counter trend rally, but something definitely to keep a close eye on. Now, S&P 500, we got down to as low as 4,045, not quite exactly at 4,000, but this right here is the confluence of that support that we talked about, and the buyers once again stepped in to bring the markets back up to some reasonable level at 4,080. So from its recent highs of 4,200, the markets are still seeing a very small pullback of about 2.93%. But nothing near close to what we expected or what we were looking for and what we have seen in the past. So as I mentioned in my yesterday's video, the market sentiment right now is extremely strong. In other words, we are seeing a lot of the bad news being priced in. So there's good news, and of course, buyers are stepping in almost every single day here. Despite red days, we are seeing green candles, and that's exactly what I meant in my yesterday's video, that the sentiment is so strong, and I quantified it. And even today, you can see a red day, but a green candle, right? What does that mean? That simply means the sentiment was so strong that the buyers were strong enough to push the markets higher than where we opened, even though we gapped down. So that in itself is a very bullish sentimental sort of a level for the markets. And if you take a look at the week here, we were only down 0.28% despite CPI and PPI numbers coming in with huge upside surprises, jobless claims coming in with a huge downside surprise, and retail sales coming in with a huge upside surprise. So all four things that I mentioned, and the Fed speakers suggesting a very hawkish tone on monetary policy. When you combine all those things, if this happened in 2022, I can almost assure you that we would have had a pretty brutal week. We'd be down like 4 or 5% easy. But this is 2023, and the sentiment has really changed with the markets holding up despite all those things coming out, which were not great indicators of monetary policy, of not great indicators of inflation and interest rates. But markets want to hold up. NASDAQ here was plus 0.59%. So NASDAQ, in fact, did much better than the S&P 500 and the Dow Jones on the week. It actually ended up pushing higher on the week. Still a lot of consolidation. So you can see that we are starting to see a bit of a break here in this rally. So again, we've seen 4 or 5 consecutive weeks of green since October, since December. The markets have consistently pushed up 19-20%. And now we're starting to see a little bit of sideways for the NASDAQ. Support level is going to stay put around here at 11,500 and resistance all the way up to 12,280. And we're once again right in the middle, not really moving all that much, but lots of consolidation sideways for the NASDAQ. Red day, but a green candle. Once again, suggests that buyers did step in, and the sentiment remains very strong. Talking about Apple here first, Apple also had a very similar candle to S&P and the NASDAQ. Red day, but a green candle. Sentiment strong. Support level is going to stay put in the 150s, and we are seeing a little bit of buyers stepping in right now. Resistance all the way up to 157 is going to be next. Talking about Amazon, and Amazon here going sideways, down a little bit close to 1%, trading a little bit over $97 per share. Resistance all the way up to $104, $105 for Amazon right now. Support level is going to stay put at $91 per share, and of course that's in and around the fair value at the moment for Amazon. Talking about NVDA, and NVIDIA here was down over 2.79%. So we're seeing a little bit more selling pressure for NVIDIA. So some more pullback is likely for the company, considering that the MACD is crossing below that signal line. The RSI is also rolling over, and the next stop for NVIDIA, in my opinion, is going to be in the 190s. So this right here is going to be the next support level that I'm watching for NVIDIA. Valuation's a little too high. Technicals do suggest some more pullback, and they've got earnings coming up next week. All of that is going to be very important for how this stock trades next week. AMD now, down to almost 2%, back under $79. So this right here is going to be that support level to watch for advanced micro devices, but we are starting to break down even further. So the next level and the next target that I'm really watching for AMD is going to be at 71, close to $72 per share. So this right here is going to be that next level to watch for advanced micro devices. And of course, resistance is going to stay put at 78.50 for AMD at the moment. Talking about PayPal here, and PayPal on the day was down quite a bit, down about 2.7%, so breaking down, unfortunately, below this level, under $75, $76. And this right here is going to be that huge gap that PayPal needs to fill eventually, which it's coming down to. So I wouldn't be surprised if it does come down to fill this gap, maybe next week or the week after. But right now, we're definitely seeing a lot of weakness. RSI is rolling over, MACD is coming down also. So not a surprise, we're seeing some more downside here for PayPal. Square also down 4.5%, so it's seeing a lot of momentum on the downside and breaking down below this support here. And we'll go ahead and turn this level back into a resistance. Support level next is going to be at $72.34 for Square moving forward. So that right there is going to be that next level, all the way down to $58, $59 per share for this company. Talking about Tesla, and Tesla here on the day holding up a lot better than compared to other stocks here. $201, $200, kind of validating that as a support. Resistance next is going to be at $228 per share. So this right here is going to be that next level to watch, and support level, like I said, at close to $201, $202. And again, the divergence continues to play out. The technicals continue to look overextended. The valuation seems a little bit stretched right now. So we've got the investor day coming up very soon for Tesla. So that's going to be super exciting on March 1st. We'll see what that's all going to be about with the presentation and whatnot. But right now, just, really just going sideways for the most part. There's a lot of consolidation, and the volume really is still pretty elevated, I should say, considering that there's been over 200 million shares traded almost every single day for Tesla at the moment. Talking a little bit about Meta now, and Meta here also holding up on the day, but still coming down to fill a little bit more of this gap. So we're going to close that out even more. Again, green day, green candle, buyers are stepping in. Next resistance really is going to be at 183. So this right here is going to be that level to watch, and support level sitting close to 153 for Meta at the moment. Talking about Netflix here, and Netflix on the day, also green candle on a red day. So buyers bought a lot, and support level is going to stay put at 332 here. Resistance 369. My fair value is going to still be at low 200s for Netflix. I don't think there's a lot of downside for Netflix. Maybe it comes down to 332, or at the most it comes down to 276. That's about it. But I don't expect Netflix to be trading in the low 200s again, which is where my fair value really is for the company right now. So it's going to be a while until I'm able to buy Netflix, I guess. Next up, we're going to talk a little bit about Google here. Google, lots of consolidation, down about 1.24%. So buyers really didn't care about Google today. A red day and a red candle, so lots of selling pressure here. Resistance is going to stay put at about $100, $104 per share, and support level is going to stay put at $86 to $87. So this right here is going to be that level to watch for Google, and like I said, resistance is going to stay put at about $100, and lots of consolidation sideways is what we are seeing from Google right now. So again, fair value is going to be in and around these levels, a little bit maybe lower, low 90s. It's going to be that level to watch for Google. And again, I will be posting more and more money investing fair values in our Discord. So in that channel, you should be able to see a lot of screenshots posted. We'll have the fair value, we'll have where the current price is, the date we calculated the fair value, and the multiples and the growth rates that I chose for calculating those fair values. So that's going to be available for all the members in our Discord under the Money Investing Fair Value channel. But for Google, support level is going to stay put at $86, resistance at $100 per share. And Microsoft here is making some changes to the Bing AI search because of very unsettling and unquestionable responses that they were getting. People were getting from Bing AI chat, and 2 back-to-back red days for Microsoft. And on the week, Microsoft is down 1.67%, so clearly underperforming the NASDAQ, clearly underperforming the S&P, and seeing a bit of a pullback here. Support level is going to stay put at 247, so this right here is going to be that level to watch for Microsoft right now, and all the way down to as low as 218. My fair value is still in the low 200s for this company. Talking about Shopify, and Shopify here also coming down over 2.89%, so continues to slide lower. Next support really is going to be at 41.53, and the earnings were, really terrible in my opinion, if I'm being blunt. And unfortunately, it was, the year that we expected that Shopify would at least give us some profitable guidance or profitable earnings, but neither happened. So support level is going to stay put at 41.45 all the way down to as low as 29, close to $30 per share for Shopify moving forward. And we're seeing some RSI and the MACDs also come down a little bit from a technical standpoint. So bottom line is the markets here slowing down a little bit on that momentum. Very, very flat week for the markets after a very hot CPI and PPI numbers. But that being said, the sentiment remains extremely strong here and bullish, and there's still a lot of euphoria. Any type of red, buyers are stepping in to buy those dips. And that's exactly what we saw this week with the markets on the week, very flat or slightly higher despite all the economic reports that we got. Next week, we still have a lot of earnings coming out, but it is again going to be a shorter week. And of course, March 14th is the next CPI numbers, and March 22nd is the next Fed meeting with the summary of economic projections. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. A lot of benefits included. I'm going to be sharing a lot of private videos for members this long weekend, along with a lot of money investing fair values and our Discord channels, along with alerts, swing trading alerts, options alerts, and investing alerts as well. As always, happy investing, and I'll see you all in the next video.